Yeah, so good afternoon. So guys, today I thought to do the grade 12, the ones which we couldn't finish. We had certain questions which we couldn't do that day. So let's finish it off, grade 12 questions. Guys, did we do this one? No, right? Did we do questions 17 and 18? Can someone confirm? Did we do this? Okay, no. So let's start from that. Okay. So shall we wait maybe 3 minutes and then we can start? Okay. If you all haven't done this question, please take these 3 minutes and start doing that question. If you are already done with it, can you send the answer for this one? You can send me through the chat box. Okay, guys. Yeah. So let's start. So the first question number 17 in grade 12 Thondaimanaru paper. Okay. So yeah, they're asking what is the adjusted creditor control account balance. Read the requirement. The first question is they're asking the adjusted creditor control account balance, and then guys, after that, later they are asking you to write the journal entry. The journal entry is the double entry to correct this second. There is a mistake in the second one. In order to correct that, they are telling you to write the journal entry. Okay. So let's start. So now they have given you guys the creditor control account before making any adjustment. That means they have given you the creditor control account before adjusting for these errors. There are errors done by the business. Before adjusting for those errors, they have given you the creditor control account balance, that is 674,000. Now they are asking you to calculate the adjusted trade payable control balance. That's what they're asking. Okay. So let's do. First of all, you can take this creditor control account balance and put it in the as the opening balance in the adjusted account. Okay, you can take the creditor control account balance and write it as the opening balance in the adjusted trade payable control account. So that is going to be how much? That's going to be 674. Why did I write it in the credit side? Because creditor, the trade payable, is a liability. So it will come in the credit side. Now, after that, guys, we should check whether it's affecting here the errors. If it's affecting, you have to do the correction. Now, see the first one. Understated discount column of the cash payment journal In the cash payment journal, you have discount received, right? In the cash payment journal, what do you have? You have discount received. So they say, guys, in the cash payments journal, you have understated your discount received by 5,000. My question for you all is, if you have understated the discount received column, will it only affect your discount received account or will it affect both? Will it affect both? Both means discount received and trade payable. What's a double entry for discount received? Trade payable is debited, discount received is credited, right? The double entry for discount received is trade payable should be debit, discount received should be credit. So my question is, will it affect only the trade payable or the discount received, or will it affect both ledger? If you say both, can you all tell me the reason? Why do you think both is getting affected? Why? What is the reason you all think both will get affected and not only one? Yes? No one knows the reason? Guys, understand, if the prime entry book is wrong, if your prime entry book is wrong, that means, guys, yes, Fazlia, that's correct. Because, guys, if your prime entry book is wrong, you know the total of the prime entry book, only you take it to the ledger accounts based on the double entry system. So if your prime entry book is wrong, your ledger account is also wrong. So that's why they say the discount column is understated, right? So that means your ledger account is also wrong, because from the prime entry book only you take to ledger. Okay, so that means now you have to correct this mistake. So how to correct? Understated, same side or opposite side? When you correct a mistake, if something is understated, you write the same side or opposite side to correct a mistake. Very good, same side. If you want to correct the mistake and if it is understated, in order to correct the mistake, you will write it in the same side. Okay. So this is not asked in this question, but I'll just write it for your understanding purpose. Okay, since discount column is understated, your discount received account is also wrong, trade payable is also wrong. So to correct this mistake, you should write it in the same side. So what is the same side? What's a double entry for discount received? Trade payable debit, discount received account credit. So your trade payable control account should be debited and your discount received account should be credited when you are correcting this error. By how much? By 5,000. Remember, it's the same side. If you want to correct the mistake, you will write it in the same side. So now, guys, go and record. They are asking you the adjusted trade payable. So you have to record this and then go to your trade payable control account and say understated discount. You can say understated discount. That is going to be how much? 5,000. Okay, understated discount is 5,000. Anyone who didn't understand this? Anyone who didn't understand this, ask me. Okay, now go to the next one. Check issued for purchase of property, plant and equipment. Okay, but recorded in the creditor column, in analysis column, in cash payment journal. Guys, tell me, when you have a check issue for property, plant and equipment in the cash payment journal, what is the column you record? Property, plant and equipment is non-current asset. What is the column you should record when you have paid for PPE? Yes, is it coming under which column? Is it coming under expense column, purchase column, creditor column, or other payment? Yes, guys, property, plant and equipment is a non-current asset. The column you're going to record is other payment. The column which you will record is the other payment column. So guys, that means it should come under other payment. The mistake they did was they went and recorded in the creditor column. Now my question for y'all is there a mistake in the cash control? Will there be a mistake in the cash control? The cash payment journal only they went and recorded. Will there be any mistake in the cash control? Nabil, you say no. Tell me why. Why do you say no? Others, what do you think? Is there any mistake in the cash control account? If you say no, tell me, guys. Yes, Amana, that's correct. Yes, Shana's correct, guys, because it is anyway deducted. Even if it's a PPE, even if you pay to the creditor control, both you will credit your cash. You will credit your cash. So there is no impact there. Okay, so if I was to show you what I'm telling here, wait, I'll show you through the working. Okay, now see guys, when you are making a payment, for what? You're paying for PPE, no? You're paying for what? You're paying for PPE. So guys, when you make a payment to PPE, the correct double entry should be, guys, PPE is a non-current asset, no? So you will debit your PPE. It's a non-current asset. PP means non-current asset, okay? So you will debit it and you will credit your cash control. This is the double entry when you make a purchase of PPE. This is the correct double entry. But what have they done? They have gone and recorded in the creditor column. So if you record in the creditor column, that means you have recorded it as cash paid to creditor. You recorded in the creditor column, guys. So that means you would have recorded it as if you made a cash payment to creditor. So how would you go and record? You would have debited trade payable and credited cash. Guys, if you compare and see, your cash has no problem, okay? Your cash is correct. Both cash is credited. Cash has no problem because guys, even if you pay to your PPE or even if you pay to creditor, still your cash goes out. So cash will be credited. So there is no problem there. The only problem is the debit entry. Instead of debiting PPE, you went and debited the trade payable. Instead of debiting the PPE, what you went and did? You went and debited the trade payable. Now, how to correct the mistake? First of all, cancel the wrong one. What is the wrong one? Trade payable debit is wrong. To cancel it, you will credit your trade payable. Trade payable debit is wrong. First of all, cancel it, guys. To cancel, you will credit your trade payable. Then record the correct entry. Correct entry is your PPE should be debit. So what is the final double entry? The final double entry will be trade payable should be second one, guys. The correction entry should be property, plant and equipment should be debited and your trade payable control account should be credited. This is the correct double entry to correct the second mistake. So how much? 25, 25. Okay, so go to your trade payable control account. You have to credit it, no? Go and say what? PPE. Right, the other entry. PPE, how much? 25,000. So you will go and credit your trade payable. What will you say? You will say PPE and write 25,000. Now go to the third one. Goods returned by Kumar, not recorded in his account. Okay, guys, you have returned goods to Kumar. Kumar is a trade payable. It's a return outwards, but you haven't recorded in Kumar's account. Tell me, will it affect your control account? Yes or no? Will it affect your control account? Yes or no? No, why? Because they specifically say only his account is wrong. It is, they say, guys, in his account only they didn't record. So that means your creditor control has no problem because individual ledger of Kumar is only wrong. Okay, yes. So because of that, if there is any individual errors, or if there is any error done in the individual ledger account, you will show it in the reconciliation statement. Okay, if there is a mistake in the control account only, you will show it in the adjusted control account. But here the mistake is in the personal ledger, so you will not show it here. Okay, so that is how, guys, you are going to record. The third one will not be recorded. It will not be recorded here. Okay, so then after that, now see, there is another adjustment. They say, note, purchase from Smith 5,000 was recorded in the purchase journal twice. You have recorded when you purchased from Smith 5,000, he is a trade payable. You went and recorded it twice. Tell me, guys, if you record it twice, will it affect your control account? Yes or no? Purchase journal is a prime entry book, guys. Purchase journal is a prime entry book. If the prime entry book is wrong, your ledger accounts also will be wrong, because the prime entry book total only you take it to ledger account. So they say in the prime entry book, what you have done, you have recorded the purchase from Smith twice. So how to correct this mistake? Anyone who can tell me how to correct this mistake? What should you do? You have recorded twice. So that means if you have recorded twice, you would have gone and recorded trade payable credit, purchase debit. You should cancel one. Guys, if you have recorded twice, just cancel one. Okay, when you make a credit purchase, what would you do? You debit your purchase and credit your trade payable. You debit your purchase and credit your trade payable, but you have recorded it twice, guys. What you should do? Cancel one. So to cancel one, you will reverse. Trade payable will be debited and your purchase will be credit. That's correct. Purchase will be credit. Yes, Stefa, that's correct. Now, how much is the value? The value is 5,000. 5,000. So go to your trade payable and you will debit. What will you say? Okay, you can say overstated, or you can say overstated purchase. You have overstated your purchase because you have recorded it twice. By how much have you overstated your purchase? By 5,000. By 5,000. Now, guys, we are done. All we have to do is get the closing balance. Now, see which is going to be the closing balance. So, yeah. So, they're asking that. No. So, the closing balance is 689,000. Answer should be 689,000. 689,000 will be the correct answer. Now the next question, provide the journal entry to rectify transaction number 2. We have already found out this is the correct answer for the question 18. They are asking you the correction entry. They are asking you the correction entry, guys. So this is going to be the answer for question 18. So if anyone couldn't understand this, listen carefully. They have recorded instead of recording in the other payment column, they went and recorded in the creditors column, in the analysis column. If you record in the creditors column, you will take it to creditor control. That is wrong. You should take it to PP because you purchased a PP. But because you made a mistake there, they have taken to creditor control. Now you have to reverse it. So you should take it out from you. What have they done? They have went and recorded as if you paid cash to creditor. So when you pay cash to creditor, you debit your trade payable. Okay. So now to take it out, you will credit it back. And you have purchased PPE. They haven't recorded in the PPE yet. So PPE is a non-current asset. You have to go and debit it. Okay. Okay, so fine. So here you have overstated your purchase because guys, you have recorded it twice. In the purchase journal, if you have recorded it twice, in the ledger account also you will take 10,000 instead of 5,000. In the ledger account, you will take it as 10,000. Because of that, your trade payable is increasing because you record purchase in the credit side, right? In the credit side of trade payable, you will record purchase. You will record the double. Instead of 5,000, you would have recorded as 10,000. So, you have overstated. Overstated, guys, you will write it in the opposite side to cancel it, to correct it. So that's why you have debited it, because you overstated your purchase. You overstated your purchase. To correct the mistake, you are going to debit. Okay. Now, guys, let's go to the next one. Question number 19. Guys, question number 19 we didn't do, right? Question number 19. Okay, let's read. Petty cash control account balance of a business was 1,320 on 2020 April. Okay, so they say the petty cash balance is how much, guys? The petty cash balance, they say it's 1,320 on the starting day. On the starting day. Let's continue. Total of petty cash expenses for March 2020 is 1,780. So they say the expenses, the petty cash expense is how much? 1,780. Interest amount was increased by 500 from 2020 April 1st. What will be the amount reimbursed in April? Okay, now see, guys, what is happening. They say at the starting date of April, okay, that is 1st of April, they say 1st of April 2020, they had a balance of 1,320. They had a balance, that is the opening balance of April, closing balance of what? Opening balance of April is the closing balance of what, guys? March. Yes, March. Guys, closing balance of opening balance of April will be the closing balance of March. So, guys, they say the opening balance of April, total of petty cash expenses for March is how much? 1,780. So they say, guys, now this is April, no? This is April. They say for the month of March, they have spent how much? March, they have made petty expenses, okay, petty cash expenses. How much is that? That is 1,780. 1,780. Okay, these are the expenses you made in the month of March. The interest amount was increased by 500 from 2020 April 1st. Okay, so they say now at the starting of April, you had a balance of 1,320. But now they say, guys, they have increased the interest amount. Interest has been increased by how much have they increased the interest? They have increased the interest by 500. They have increased it on 1st of April. Okay, so now they are asking you what is the amount reimbursed in April. Okay, they are asking you, guys, what is the amount reimbursed in April? My question for you all is, what is the amount of interest before this increased? What is the amount of interest? The original interest amount. Can you all tell me? What is the original interest value? Soon tell me, guys. Original interest value. Now see, if you see, guys, the March they have spent 1,780. March they have spent 1,780 and they had a balance also 1,320. So what would have been the March at the starting of March? What would have been the interest amount? That's my question. What would have been the interest value? Because, guys, every month starting date, the petty cashier should have the interest amount in his hand. before he starts spending, the petty cashier should have the impressed amount in his hand. Then only he will start spending. Then only he will start spending. So my question for you all is, how much is the impressed amount in the month of March before the increase? Yes, guys, if the expense is 1,780 and if the balance at March closing balance, if the March closing balance, guys, now you understand April opening balance is going to be March closing balance. April opening balance will be the March month closing balance, guys. That is logic, that is understandable, right? So if the month of March closing is 1,320 and they have spent 1,780, what is the fixed amount they should have every year, every month? They should have, guys, 1,320 plus 1,780. The fixed amount they should have every month is 3,100. 3,100. From 3,100 only they have spent 1,780 and they had a balance of 1,320. Now, guys, the original interest is how much? The original interest, just now we found out, the original interest is 3,100. Now they say the interest has increased by how much, guys? This is not needed, okay? This is not needed for the question. I'm just explaining you. Okay, so they have now, what is the new interest value? What is the new interest after the increase? After the increase, guys, what's the new interest value? The new interest after the increase is going to be 3,600. 3,600 will be your new interest. They can ask you a question rather than asking you the reimbursed amount. They can ask you what is the new interest value. New interest. Now see, guys, the new interest is 3,600. How much cash balance does the petty cashier have in the start of April? How much cash balance does the petty cashier has in the start of April? How much? Just give me 1 minute. Yeah, at the starting date, guys, they have 1,320. That's what they told. At the starting date, they have 1,320. Our new interest is how much? Our new interest is 3,600. At the starting date, they have 1,320. So how much will they ask as reimbursement? How much will they ask as reimbursement? Okay, that is going to be, guys, see the balance of the opening balance in the month of April. Okay, opening balance in the month of April is 1,320. 1,320. So how much will you reimburse? How much will you reimburse? That is going to give you the answer. So the reimbursement will be 2,280. 2,280 will be your reimbursement. So that's the answer. 2,280,000. Sorry, it's 2,000. No, 2,280 rupees. Clear? So this is how you will do. This is how you will do. First of all, what did we do? First of all, we found out how much is the original interest. After we find how much is the original interest, we had to find the new interest. Original interest, you should add the increase in interest. You will get the new interest. After you find the new interest, you have to deduct the amount you have in hand to find how much you should ask from the main cashier. You have 1,320 in your hand. In order to get 3,600, you will ask the petty cashier main cashier to give you another 2,280 more, so that you achieve the new interest amount, because you need that. In order to get this, you have to ask how much? You have to ask 2,280 rupees. Clear? So that is going to be your answer. Are you all done? Now let's go to the next one. What are the values of check unpresented and checks unrealized? They are asking the value of checks unpresented and the checks unrealized. Let's read it. Is that the only question? No. And then they are asking what is the bank statement balance on when April 30th. At the closing date, they are asking you the bank statement balance. Okay. So now let's read the question. Now, guys, they say cash control account on the starting date is 32,000 debit side. Okay, so can you all quickly draw the cash control? Okay, the cash control, they say on the starting date. I'll just quickly draw a cash control account. Okay, cash control, they say on the starting date, how much is the cash control on the starting date? It's an asset. No, guys, it will come. That's why they say it's debit side. If sometimes it can come in the credit side when it is an overdraft. If it's an overdraft, it can come in the credit side, but usually it's debit. Okay, the reasons for the difference between the cash control and the bank statement are unpresented checks. Okay, unpresented of 20,000 and unrealized of 12,000. Okay, now see guys, they are telling the reason for the difference between the bank statement balance and the cash control balance at the starting date is what the difference reason is due to this unpresented of 20,000 and unrealized of 12,000. Okay, so that is what they are saying. Let's see. Total of cash receipt journal for the month of April. Guys, they have given how much is the total of cash you received. So total of cash received will be debited in the cash control. We didn't do this yet, okay? We haven't done any adjustment. We'll do it at last. Now they say, guys, the cash receipts total will go to the debit side of the cash control, right? The total of receipts should go in the debit side of the cash control. How much is that? 140,000. Okay. And they say the total of payment. How much is the total of payment? The total of payment is 105,000. 105. Okay. Now see. The value of check realized by the bank in April is 121 and the value of check presented is 109,000. 109,000. Okay. So fine. Wait a minute. So that's going to be 30, 29, 29. Okay, fine. They say, guys, the bank charge is how much? Bank charge is 1,500. Okay, bank charge is how much? The bank charge is going to be 1,500. So where will you record bank charge? Usually, guys, bank charge is an omission. Okay, it will come in where? In the adjusted. It will come in the adjusted cash control because it's an omission. Okay. So if you want, guys, but you're doing part one, right? You don't have to waste time like this, but I'll just tell you, the bank charge is usually coming where the bank charge comes in the adjusted cash control. Usually it's an omission because until you receive the bank statement, you will not record. So it will come in the here. Bank charge will reduce your cash balance. So you have to credit your bank charge. How much is the bank charge? 1,500. 1,500. Okay. So now what you can do is, guys, they say the value of check presented and the value of check realized is given. Now see, guys, you have how much of receipts? The receipts you have is 140,000. 140,000. They say, guys, even your receipts is 140. The value of check realized is how much? 121,000. The value of checks realized is how much? 121,000. What do you call the difference? What do you call the difference between the checks, the money which you have in the cash receipts and the checks realized? What do you call that? Yes? What do you call it? Okay, unrealized check. But guys, you can't forget one thing. They said at the starting date. Okay, so yes, I agree with you. Now see guys, what is happening is they said at the starting date, there was the opening balance of the bank statement and cash control was different due to two reasons. Opening balance of the cash control and the bank statement were different due to two reasons. What are the two reasons? Okay, so that means opening balance. If you take the opening balance, if I was to draw you the month of March bank statement, okay, listen carefully guys. They always test question like this where they give the bank statement opening balance. They will give you the bank statement opening balance different from the cash control. You should know what to do then. You should know what to do because guys, they can give you like that. Now see, I'll just draw this, okay? This is the bank statement. This is the bank statement of the March, not April. Month of March, sorry, bank reconciliation statement of the month of March, not April, okay? So why am I drawing this? I'll tell you all now. Why am I drawing this? I'll tell you all now, okay? Wait a minute. So now see, this is how it is. Now they say guys, the cash control balance is how much? Opening cash control balance is 32,000. They say the difference between the opening cash control and the bank statement. Opening cash control and the bank statement balance, the difference is due to unpresented check of 20 and unrealized check of how much? Unrealized check of 12,000. I'll give you all some time. Can you find me how much is the opening bank statement balance? I'll give you all few minutes. Can you all quickly find me the opening bank statement balance? How can you do that? Through this information. Find me and tell me guys, what is the balance in the opening, in the bank statement, opening bank statement balance? How much is it? Check properly. Don't forget which one you should add and which one you should deduct. Unpresented or unrealized. Yes. Guys, what you have to do, you have to add unpresented checks. You will add the unpresented checks and deduct unrealized check. You will deduct what? You will deduct unrealized check. Now they say, listen carefully, the students who didn't understand, they said, guys, opening cash control balance is 32,000. But they said there was a difference between the cash control and opening bank statement balance. The reason for the difference was unpresented check of how much? 20,000 and unrealized check of how much? 12,000. So unpresented should be added, unrealized is deducted. Now you can find how much is your opening bank statement balance. Opening bank statement balance is 40,000. Okay, cash control opening balance is 32,000. Opening bank statement balance is 40. Even though they haven't asked you in this question, maybe they can ask you in another exam paper. They can ask you, calculate the opening bank statement balance. So you can easily find, because they have given you the cash control, they have given you unpresented, unrealized checks. All you have to do is do those adjustments to get the opening bank statement balance. So remember guys, this is month of March. We are doing for the month of April. So because of we are in month of April, for us these are opening balances. This is opening cash control. This is opening bank statement balance, because we are in the month of April, not March. Do you understand? Now they say, listen carefully, they say the cash you received is how much? Cash you received in the cash receipts journal is 140,000. But they say, guys, how much was realized? In the month of March, they said, in the month of April, they say realized amount is how much? The realized amount is 121,000. 121. You can't forget one thing, guys. You can't forget. Now, if you compare these two, you will get the unrealized check amount. Okay, if you compare these two, you will get unrealized check, but that is not the correct unrealized check value. That is not the correct one. I'll tell you all why. Okay, now you can you remember the last month also you had an unrealized check. Last month also you had an unrealized check. You cannot forget that, because maybe inside this realized amount, maybe there is this 12,000 check which was unrealized last month. Maybe inside this 121,000 realized check, there is 12,000 worth of check which was unrealized last month. So guys, if you just compare these two, and get the unrealized amount, your answer is wrong. Why? Because you didn't consider the last month unrealized check. You didn't consider the last month unrealized check. You didn't consider. So that means, guys, what you have to do, last month unrealized check which is there, you have to add it. You have to add it to get the correct unrealized check amount. So guys, the correct unrealized check amount for this month is how much? For this month is going to be 19,000 plus 12,000. That is 31,000. That is 31,000. Are you all clear? Because guys, why did I do this? Because this 121,000 realized check includes last month unrealized check of 12,000. You can either do like this, or I will tell you another method. You can take, now there is 121,000, right? From this you can take out the last month 12,000. There was a last month 12,000, right? You can take it out. Last month 12,000. So then you will get the realized amount only for this month, because last month 12,000 might be realized this month, right? So you can take it out. Now you find the difference between this and this, you get the unrealized amount. So that's going to be, guys, 140,000 minus 109,000. Another way to get the answer. 31,000. Another way to get the answer, 31,000. Are you all clear? How did 19,000 come? Difference between these two. Guys, there are two ways to do this. The first way, what you can do is you can just find the difference between these two and add the last month unrealized check. Or what you can do is this 121,000 realized check, from that you can deduct the last month unrealized. Then you will get this month realized. Okay, if you deduct the last month, this is last month, okay, unrealized. Guys, you don't think you want it tested like this? I have seen so many questions nowadays, bank reconciliation, they make it difficult by giving like this. So if you don't know this adjustment, you will lose all your marks. Okay, so guys, this is last month unrealized check. This, after you deduct last month unrealized check, you will get April month realized check. Realized check. So if you get April month realized check, you can compare it with the cash receipt. So then you will get the unrealized amount. This will be the unrealized amount. Unrealized check for April. Unrealized check for April. Are you all clear, guys? Are you all clear? So guys, what's the answer? I told you can either do this method, both method will give you the same answer. I told you all properly, okay? I told you can either do the first method or you can do this method. Second method which I taught, okay? Both method will give you the answer. Clear? Okay, if you all have to take time at home, to study this again, guys, because they will test you. Okay, so now see, now they're asking what is the value of unrealized check. Unrealized check is 31,000, not 19,000, because you have to take 19,000 and add the 12,000 of the last month to get 31. So answer is 31. Now I'll give you all 2 minutes. Can you find me the unpresented check? Can, like what I did just now, can you all find me unpresented? I want everyone here to get the answer. Will you send the PDF of this paper, guys? If you go to our YouTube channel, Sateha College, you will find in the description box. In the description, you will find the PDF. You can just download it. Okay? You can just download it. Find and tell me how much is the unpresented. Now you can't make mistake. You can't make. I'm asking the final answer for unpresented check. Please think carefully and don't do a mistake. Make sure you do the method which I taught you now. Good job, guys. So far, all correct. Fazlia, check your answer. Other than that, others, good job, correct. Okay, so far correct. Yes, Moaza. Amana, you also have done the same mistake. Check again. Others, quickly send me your answers. I want each one of you to try here. Inshira, try again, dear. Try again. Others, correct. Rizla, you also. Some of y'all are getting the answer as 24,000. I assume y'all are doing the same mistake. Okay? Check again. Shanjana, can you check again, dear? Mubina, check again. Others who I'm not telling your names, your answers are correct. Okay? Good job. Now, guys, see what you have to do. Okay? You have to see how much is the cash paid. Okay? How much is the cash paid in the payment journal? In the payment journal, they have given you the cash paid amount. How much? 105,000. You have paid 105,000 cash. Okay, you have paid how much? 105,000 cash. Out of that, now see how much is getting presented. They say the presented amount. Okay, the presented amount is 109,000. 109,000 is the amount presented. Now see, guys. Now see. If you see this, they have given last month there is an unpresented check of 20,000. Last month there is an unpresented check of 20. Unpresented check of 20. So you should understand the first method you can do is you can take it out from this presented amount because it includes last month unpresented. Why did I deduct it? Because, guys, it's including the last month unpresented check. So this is the last month unpresented check. So that is the reason I take it out. I take it out from the current month presented because this is relevant for the last month. Last month. Okay. So then you will get the answer for the April month presented check. You will get the answer for the April month what? April month presented check. Okay, so guys, now you can do is you can compare these two and get the difference. The difference will give you the unpresented check amount. If you compare this, there will be a difference. The difference is what is going to be the unpresented amount. That is, guys, 16,000 is the unpresented check for the month of April. Unpresented check for the month of April will be how much? It is going to be 16,000. Okay, and then what you can do, guys, if you want, you can do the other method which I taught you all. Okay, you can do the other method. What is the other method? Okay, so the other method is where you take the unpresented check. How do you get that? You take this, okay, and you can just Can't do that. No, here. It's coming a negative value. No? Yeah, in this one, it's difficult to do. Wait, even if you do, you get a negative value. Just let's see. Yeah, you get a negative and then you take the last month. Still, you get the same answer. Okay. You take the last month. Last month is how much? 20,000. Last month is 20,000. Then you get the answer. The answer is going to be 16,000. This plus this 16,000. See, both will give you the same answer, 16,000. Okay. So if you ask me which method is better, I would tell you this method is better. Okay. So guys, can we continue? Yeah, so the students who got 16,000, that's the correct answer. Okay. The students who got the answer as 16,000. Yes, even this is correct. Okay. But still, I would prefer this method. Okay. Yeah, the logic behind adding this. Okay, one student is asking what is the logic behind doing that. Just because, guys, last month unpresented would be presented this month. Okay, so would be presented this month. So we are trying to find what is the unpresented check for the current month, right? So this presented amount will include last month unpresented. So that's why in order to take it out, you do that way. Okay. Now, guys, now let's continue. We are done with that. Now we have to do the last question here. After that, we can do the grade 13. In grade 13, this one, there is grade 12 questions, which we haven't finished it. Okay. So after that, we can try that. So, guys, today we will try to finish all grade 12 questions. Okay. Okay, guys. So now see, yeah, we forgot question 21. What is the bank statement balance on 2021 April 30th? Okay, how to find the bank statement balance? Now you know how much is the unpresented check. You know how much is the unrealized check. You can find the bank statement balance, right? So just get the cash control. You can get the cash control closing, guys. How much is the cash control closing? So get the cash control closing. Okay. So how much is that? Your cash control closing is 67,000. Okay. Cash control closing becomes opening of what? Opening of adjusted cash control. Cash control closing becomes the opening of what? Opening of adjusted cash control. So how much is that? 67,000. Now you can find how much is your adjusted cash control closing balance. Get the adjusted cash control closing balance. That is how much? Adjusted cash control closing balance is going to be 65,500. Yes, that's correct. 65,500. Now, where do you take this? Now, we have to find the bank statement balance, guys. Where do you take it? Where do you take it? Where do you take it? Yes, you have to take it to bank reconciliation of April. You will take it to the bank reconciliation of April as the adjusted cash control balance. Adjusted cash control balance is 65,500. You add the unpresented check 16,000. You deduct the unrealized check of how much? You will deduct the unrealized check, that is, I forgot, 31,000. Okay, 31,000. And then you will get the bank statement balance. So how much is your bank statement balance? 50,500. Your bank statement balance is 50,500. Is there any other way to get this answer? Yes or no? Yes or no? If you know the answer, answer. Okay. If you don't know, I mean, if you know how, if it is yes, tell me how. How? Is there any other way to get this answer, guys? What do you all think? Yes or no? Is there any other way to get the bank statement balance without doing the method which we did just now? If you say yes, can you all tell me how? Come on, guys, you can answer. Yes, Sateha. Yes. Anyone else who can tell me the answer? Come on. What do you think? Is there any other way? Is there any other way? Okay, fine. That's why prepare a bank statement. Okay, that's a good idea. Prepare a bank statement. Okay, well, let's see. And then, okay, guys, we'll try another way. You don't have to directly prepare banks. You don't have to prepare bank statement and waste time. You can just get the answer because bank statement takes a lot of time. How much is the opening bank statement balance? Opening bank statement balance, we found out that is going to be 40,000. Opening bank statement is 40,000, guys. What you can do, opening bank statement, you can add the realized check because realized check will increase your bank statement. Add the realized check. Realized check is how much? 121,000. Okay. Then you deduct the presented check. Presented check is the amount of check issued in the bank statement. So that is going to be 109,000. 109,000. Okay. And then there is a bank charge. You should deduct bank charge. There is a bank charge. Let's see whether we are getting the answer. I hope we will get it. Okay. So bank charge will reduce your bank statement balance. How much is the bank charge? Bank charge is 1,500. Now get the answer. I hope we get the same answer. Yes. See, guys, both method is possible. If you ask me which method will save your time, I would tell you the second method. Okay, guys, because if you had done the first method, you should draw the cash control, you should draw the adjusted cash control, you should draw the bank reconciliation statement to get this. To get this value, 50,500. But if you have the bank statement information, if you can do this quickly, you will save a lot of time. So answer is 50,500. Guys, did you all understand what I'm trying to say? Did you all understand? So guys, this is how you do. I'll try to show everything in one. Okay, I'll try to show everything in one. Maybe then you can check it properly. Wait. Okay. So guys, in this question, you studied a lot of new, maybe if you all didn't know, you might have studied a lot of new stuffs, okay? Please make sure you understand them because that's going to help you a lot. Okay, just write it down if you have missed anything. Miss, can you explain the second method again? The second method is where you go through the bank statement. Okay, you don't have to draw the exact bank statement. You can do based on the bank statement. You have the opening bank statement because we found out opening bank statement. You can add unrealized checks because realized check will increase your bank statement balance. You can add that. And then deduct presented checks because presented checks will reduce your bank statement. So I deduct it. And these bank charge, guys, remember bank charges are omissions. Okay, you will ask me why I specifically deducted the bank charge. Because bank charges are omissions, okay, which is not there in the cash control, which is not there in the cash control. It is only recorded in the bank statement. After you receive the bank statement, then only you will record in the adjusted cash control. So until you receive the bank statement, you don't know about this bank charge. So that's why, guys, bank charge is an omission, which is the charge asked by the bank. They deduct it from our bank account because they are providing service as a current account holder. Because we are a current account holder, they provide us services. So they ask us a charge. That is what is the bank charge. Because of bank charge, our balance reduces. So I deduct it. So guys, then I get the closing bank statement balance. Okay, so now Khadija is asking, Miss, then if there is a direct deposit, are we adding to calculate bank statement? Exactly. Direct deposit is also an omission. Direct deposit is also an omission. For example, let's say, guys, there is a direct deposit. A direct deposit, I'm just assuming. Then you will add. Okay, let's say there is a standing order. That is also an omission. Standing order is also an omission. So standing order will reduce your bank statement balance. You will deduct it. Like that, guys, all these omissions should be separately shown in the bank statement. You will separately show it because that's going to affect your balance. Are you all clear? If you all are clear, please raise your hand. If you all are clear with this question, raise your hand. If you want anything, just write it down, guys. Don't just wait. Maybe it will be useful when you do these questions again at home. So if you feel like something is important and you didn't know it, you can just write it down. You can refer later. Yes, whatever the business increases, we decrease in the no. Wait. I'll read your question again. Whatever we business credit, we deduct. Yes. Okay. You have a doubt. Okay. Why do you do this now? Have you seen a bank statement? In the bank statement, guys, there is a column called balance column, right? We go through this based on the balance column. Okay, if you all have seen a bank statement, in the bank statement you have a column called balance column. Wait, I'll show you all. Okay, just give me 1 minute. Okay, so if you see a bank statement, not this one. Okay, so if you see a bank statement, guys, in the bank statement you have 3 columns, right? In the bank statement, you have 3 columns. So what I'm doing, the second method which I did was, I actually only did this balance column. What we do is, when your money comes, I increase. When your money goes out, I reduce. So like that only I found those values. Okay. So that's a simple way to get the bank statement balance. Now we can continue with the next one. Okay. So let's see. Goods sent on sale or return basis. Goods sent on, that is question number 22. Goods sent on sale or return basis at a cost of 9,600 was recorded in the debtor control account and sales account. The invoice price was determined by adding 20% profit on sales. Markup or margin? Markup or margin? Quickly tell me. Markup or margin? Yes, on sales. When they use the word on sales, it's margin. Okay. If it's markup, they will use the word on cost. If it is markup, they will say profit is calculated on cost. If it is margin, they will say profit is calculated on the sales value. So guys, they have sent goods on sale or return basis. Either you have to sell. If you cannot sell, you have to return it on the time period given. Within the time period given, you have to return it to the manufacturer. Okay. So now see, to the business. So they have sent goods sale or return basis. Guys, when you send goods on sale or return basis, you can't record it as your sales value. You can't record, because guys, until it's 100% sure you have sold it. I mean, the agent have sold it, or maybe the agent says that he is taking the goods, or maybe guys, the expiry date passed. Then only you can record it as a sales. Other than that, guys, you cannot record it as a sales until the expiry date passes, or the agent has actually sold the goods, or maybe guys, agent accepts the goods. Okay. Now see, what have they done? Now, when they sent on sale or return basis, they did a mistake where they went and recorded in the debtor and sales account. I told you all just now, if you send goods on sale or return basis, you cannot record. You cannot record. Okay, so they have sent the cost is 9,600. They have recorded in the debtor and sales account, which is wrong. Because guys, I will repeat it again. If anyone doesn't know what is sale or return basis, this is a condition, agreement made between the supplier, the business, and the agent. The business will tell the agent, listen agent, you have to sell these goods. But if you cannot sell it, you have to return it on the time period given, the duration given. Before that, you have to return. If you don't return, I will not take those goods back. You have to keep it. I will record it as my sales. The problem here is the business has done a mistake. Okay, the cost of the goods is how much? The cost of the goods is 9,600. 9,600. This cost of goods, they have added 20% profit. 20% profit, okay, 20% profit, and they have sold, they have recorded it in the sales account and debtor account. These goods have not been sold, and the time duration to these goods, to the return of these goods has not yet been over. Read it one more time, this line, and tell me, is it correct to record as a sales or no? Is it correct or no? Read it and tell me. Guys, they say the time duration is not passed. And they say, guys, if the time duration is not passed and the agent haven't sold it also. So if the agent haven't sold it, however, how can you record it as your sales? It's still your own good. You can't record it as your sales. Okay. However, the cost of these goods were taken into consideration in stock calculation. Just give me 1 minute. Okay, so what have you all done is they have gone and recorded it as their sales, and but the thing is they have included in their cost calculation. So that means, guys, have they recorded the cost of the goods? Have they deducted it, or have they included the cost of goods when they calculated the closing stock? Have they deducted or have they included? Have they deducted the cost of the goods which were sold, or have they included in the stock calculation? Yeah, what? Guys, they have included, they haven't deducted, because they say they took that into consideration when they calculated the stock. So the only problem is they recorded in the debtors account and sales account, even though this is not a sales. Even though it is not a sales. Now see, guys, the cost is 9,600. Cost is 9,600. Now how much is the profit? Profit is 20%. They say profit is 20%. Now tell me, now this is markup or margin. You all told me, guys, this is margin because they say it is on sales. They say it's on sales. So that means, guys, this is margin, not markup. Margin, not markup. When it is margin, is the sales 100% or the cost is 100%? Which is 100%? If it is margin, very good. Sales, guys, when they say it's margin, sales becomes 100%. Sales is 100%. Now tell me, sales minus cost of sales is profit. Tell me, guys, then how many percent is cost of sales? Sales minus cost of sales is profit. Then can you all tell me how many percentage is cost of sales? Very good. 80%. Cost of sales is how many percent, guys? Cost of sales is going to be 80%. So now see, 9,600 is 80%, means, guys, you can find how much is 1%. If you divide by 80, you will find how much is 1%. Now, if you multiply by 100, you will find how much is 100%, because we need that. We need to find how much is 100%. So, guys, if you multiply by 100, you will get how much is 100%. Okay, then the profit will be sales minus cost of sales. No, profit is 2,400. Now, what should you do? They have gone and recorded this where? They have gone and recorded this in the sales. They have debtors account, they have debited, and sales account, they have credited how much? They have recorded this 12,000. They have recorded this 12,000. Now, guys, you know this is wrong because this is sent on sale or return basis. This is wrong. Because this is wrong, now you have to do the correction. To do the correction, you should cancel. To cancel, what you have to do? Write the opposite entry. You have to cancel because this is not an actual sales. Because this is not an actual sales, you have to cancel. Sales becomes debit, debtor becomes credit. Now you have to cancel it. Debit your sales, guys. Sorry, debit your sales and credit your debtor. You have to reduce and that you have to cancel. So to cancel, you will write this entry. So the answer will be, guys, sales becomes debit 12,000, debtor becomes credit by 12. This is the correct answer. Are you all clear? Okay, are you all clear? So I think we are done with all the grade 12 questions. Just check, someone check and tell me if you are done with part 1 grade 12 questions. Just check quickly and tell me if we are done with part 1, all 25 questions in grade 12. Are we done? No, because they have already recorded this, and this is wrong because this is not a sales. This is not actually a sales. Okay. So that's why you don't have to. Don't we have to record the correct entry for closing stock? No, we don't have to. They say they have already recorded the correct entry. They say they have already included the cost. So if they have already included the cost, that means they have already recorded it. You understand? So you don't have to go and record it again. So in grade 13, I think we did up to question 8. In grade 13, we did up to question 8. Don't worry, grade 12, we are doing grade 12 questions only. Okay. So up to question 8, we are done. Now, shall we do question number 10? We'll keep 9 for later. Guys, we'll do question 10 first. Now see, the accounting concept followed in preparing financial statements related to stock loss and calculation of stock at its NRV. What are the concepts? Can you all tell me? Stock loss. What is the concept which talks about stock loss? Yes? Give me your answers. Question number 10. Okay, guys, you have to give 1, 2, 3, 4. You can't just tell me one answer because there are 2 options, 2 answers given. Answer is, guys, for question 10, answer is second one. Okay, answer is second one. Matching and prudence concept. Matching and prudence concept. Guys, matching and prudence concept only talks about stock losses and this. Guys, see, for example, now what you do is when you calculate your cost of sales, guys, you deduct this stock. When you calculate LKS2 says, guys, NRV and cost, you should compare and see which one is lower. Okay, why do you do that? Because you are being prudent. You are trying to see, guys, in the future, you know that because of the current transaction, you know in the future you are going to have a loss. You are going to have a loss because of today's transaction. You have bought a stock today. You have bought a stock today. Because of that, you know in the future you can sell it at a lower price. Because you bought it today only, no, you have a loss tomorrow. So Prudence Concept says, if you know there is going to be a stock loss in the future, don't wait till the future. Record the loss right now. Why? Because, guys, we are trying to be prudent. Why? Guys, because we bought this stock current year, right? We bought this stock current year. That is why we have to record it. Okay, so that is why you record the NRV. You compare NRV and cost and record whichever is lower is due to the Prudence Concept. Okay, Prudence Concept. And then, guys, stock loss. Now see, this NRV, this one is Prudence Concept. Stock loss is matching concept. Okay, matching concept only talks about stock loss, guys, because you are trying to match income with expenses. You are trying to match the income with expenses. Okay, so the sales is the income. Because of that, you have a stock loss, that is the expense. You are trying to match income and expenses. So that is why we say matching concept. Okay, now go to question number 11. Due to an error understating stock on 2019 December 31st, profit for the year 2019 and 20 respectively would be. Okay, so guys, they are telling due to an error of understating the stock on 2019 December. Okay, what is going to happen to the profit? It's a good question. Okay, now tell me, guys, 2019 December stock is going to be for 2019 opening or closing stock. For 2019, this stock value is opening or closing stock. Think an answer. Now they say, guys, this is question number 11. Okay, what are they telling is 2019, that is 31st December 2019. Okay, there is a stock which is understated. My question is, this is going to be 2019's opening or closing stock. For 2019, is it opening or closing? See the date. Yes, it's closing, guys. For 2019, this is the closing stock. Closing stock. What about 2020? For 2020, what is it going to be? Closing or opening? Yeah, for 2020, it is going to be opening stock. For 2019, closing stock will be 2020 opening. So they are asking what is going to happen to the profit if this is understated. Let's say, guys, the correct stock value. Let's say the correct stock value is 10,000. Okay, 10,000. But what have they done? They have understated it. Okay, I'll just write one. Both are going to be same. No, they have understated and they have recorded the wrong one as 8,000. The correct one should be 10,000, but they have recorded it as 8,000. This is the mistake they did. Okay, so now they are asking what is going to happen to the profit. Now let's do this and see. Okay, I can directly tell you all the answer, but I want to show you all how to get that. How to get that. Okay, so now I'll just draw a format. Okay, it's a hypothetical one. I don't know from where I got the values. I just assumed the values and put. Okay, so we'll say, guys, sales, cost of sales. You know, cost of sales is opening stock. plus purchase minus closing stock, and then you get the gross profit. You get the gross profit. So let's assume, guys, the sales is 50,000. 50,000. Let's assume the opening. Now we are doing 2019. Okay. Let's assume, guys, opening is how much? Let's assume the opening is 5,000, and then we'll say, wait. Okay. So I can directly tell you, but I will show you with values. Okay. Let's say, guys, the purchase is going to be 30,000 maybe. Okay. And then let's say now see the closing stock. Correct one should be how much? Closing stock. Correct one should be 10,000. 10,000. Okay. I'm doing for 2019. Correct one should be 10,000. But what have they done? So that is going to give you how much cost of sales? That's going to give you how much cost of sales? 35 minus 10 is 25,000. So how much is your profit? How much is your profit? Calculate and tell me. Your profit is going to be 25,000. Okay. Your profit is 25,000. If you had done the correct thing, if you had done the correct thing, your profit is 25,000. Now what we will do, guys, let's do the wrong thing and see. For 2019 itself, we will make the closing stock as 8,000 instead of 10,000. That's the wrong, no? We'll make it 8,000. Now what happens to cost of sales? What happens to cost of sales? Is it 27,000? Cost of sales is 27,000, which will reduce your profit, to 23,000. So now what we did was for 2019. Okay. Now we did first for 2019 financial year. Okay. So now what we can do is we can do for 2020. Same like we did for 2019, we can do for 2020. So based on 2019, what happens to the profit? Profit decreases. Okay. So 11th one, profit decreases will be the first answer. Okay. Now go to 2020. Now, you know, in 2020, this is going to be your closing or opening. In 2020 financial year, this is going to be your opening stock, not your closing stock. Okay. It's going to be your opening stock, guys, not your closing stock. So same like I did, I'll just put the same values, only change I will only change the required item. Now we have to only change the opening stock because that is what is changing, right? Other than that, others I'll keep the same thing. I will just change the opening for you all to show what is happening. Now guys, see, wait. I'll just change the opening. So let's say the closing stock is let's keep it 10,000. Let's say, guys, the closing stock is 10,000. We'll change the opening. Okay, so the correct opening stock value is how much? The correct opening stock should be for 2020. The correct one should be 10,000. But what have they done? They have recorded it as 8,000. They have recorded it as 8,000. Can you all quickly tell me how much is the cost of sales? 30,000 here. And here the cost of sales is how much? Here the cost of sales will be 28,000. Now what is happening to profit? What is happening to profit, guys? Profit is, what's happening to profit in 2020? Yes, guys, in 2020. In 2020, your profit is increasing. So guys, this you can just put values and get the answer. Okay. In 2020 financial year, your profit is increasing. In 2019, profit is decreasing. Okay. Profit is decreasing. Can you all tell me the relationship? I want you all to tell me the relationship. Okay. I'll just give you the values. Can you all please tell me the relationship? Okay. What I'm asking is the relationship between opening stock, closing stock, purchase. Okay. Tell me guys, what happens to cost of sales? What happens to profit? When opening stock is increasing, when opening stock increases, what happens to cost of sales? Okay, based on what we found out just now, you can come to a conclusion. When opening stock is increasing, now see here the opening stock 8,000, it increased 10,000. When opening stock increases, what happens to cost of sales? Your cost of sales also increases. If your cost of sales increases, what happens to profit? Decrease. Profit decreases. Let's say the other one. If the closing stock increases, what happens to cost of sales? Cost of sales decreases. Okay. You can just put values and find out, guys. When closing stock is increasing, cost of sales decreases, which will increase your profit. Okay, now go to purchase. When purchase is increasing, what happens to cost of sales? When purchase increases, cost of sales also increases, while the profit will decrease. So guys, they usually test you this. I don't want you all to memorize, guys. No use of memorizing, because when you go to the exam, you will confuse yourself by memorizing, because either increase, either decrease. No, so you might confuse yourself. So just understand this, and if you just want to check, you can just put values like I did just now. You can put values by yourself and check it. So if you ask me, opening stock and cost of sales is positively related. Remember, if one is positively related, profit will be negatively related, opposite. If cost of sales increase, profit decrease. So if you want, you just have to remember only one thing. What is that? If opening stock and cost of sales is positively related, closing stock and cost of sales is negatively related. Purchase and cost of sales is positively related. Remember, if opening stock increase, cost of sales increase. Cost of sales increase means profit will decrease. Always this and this opposite. This and this always opposite. Okay. I hope you all understood. Guys, we can stop it here. Because Jumana, so net profit and gross profit here, there is nothing difference, right? They didn't give you any expenses, right? So gross profit or net profit, both are going to be same here, because they didn't give you any expenses to calculate. You understand? Okay. So guys, we stop it here. Next class we'll continue. We have more grade 12 stuffs to do. We'll continue it next class. Okay. We have to do up to question 14. I think up to question 14 is grade 12. Okay. So guys, that's it for today. Take care. Study well. Bye-bye.